Welcome to another episode of the podcast. Today, we're actually doing something different. We're doing a quarterly update. Over the past few months, we've been talking to different guests around a range of different investment topics. And it's very important to stand back and have a look at how the market is changing, what are the key factors that are driving investments, and particularly at this point in time, we are in the middle of a federal election in Australia. And so the election is really a resetting of policy. There are some very interesting policy differences between each side of politics that we'll explore today. And we'll discuss what the impact of that is in the overall context of how the past quarter has gone. So we're recording this right at the beginning of April 2025. We're going to review how the first quarter of the calendar year has gone. And we're going to start off with the big picture, macro markets, and really what's been happening across the inflation sphere. Inflation has been one of the biggest issues since the pandemic. And inflation really took off and came and caught a lot of people by surprise in response to the supply chain disruptions that we saw during the pandemic. At one point in 2021 and 2022, there was panic in the markets that this inflation cannot be bottled, it will be systemic, it will run away. And we saw how scared and how fearful central banks were by the way they increased interest rates. We went from zero interest rates to 400 basis point increases in interest rates in the space of a year and a half. Now, that is very, very rare. And the exercise there was to put a lid and to cap off this inflation before it ran away too hard and couldn't be controlled. Inflation is also referred to as the inflation dragon. And so this dragon has now been put back into the bottle and has probably turned into a little lizard or a little spider. Inflation, the good news is that inflation in the first quarter of 2025 calendar year has come back smack bang in the middle of the 2 to 3% target range that is set by the Reserve Bank. Now, how did we get here? Why has inflation come back and where will it go? If we have a look at inflation post-pandemic, so after everything started to open up, after life came back to normal, we saw that there were a few areas that were driving inflation. One of the key areas was housing. Housing was a contributing factor, and that's because house prices rose so much when interest rates were dropped to zero. And when house prices move, they move with a lag. It's not like the price of bananas that moves overnight. It is a lagging factor. And so because houses became expensive and the cost to manufacture a house became more expensive because of construction costs, housing became a very sticky part of inflation. And that flowed through into the rental market. We saw not only house prices rise, but rents rise. After interest rates increased, that put a cap on house prices, and slowly, particularly toward the end of 2024, we saw the real estate market start to consolidate. Prices didn't necessarily drop, but they stopped going up. And that's what inflation is. Inflation is the rate of increase in prices. It's not the absolute. It's the rate of increase. And house prices slowing down and not rising by as much, in some markets not rising at all, and in other markets falling slightly, that really helped inflation come down. Another measure which is very important, and I've been pointing to this really since last year, is the federal government's energy rebate. Now, some will see this as politicized. I'm taking the politics out, whether it's right or wrong. I'm putting that aside, and I'm saying that the energy rebate, the capping, whether artificial or genuine, the capping of energy prices has started to have an impact on overall economic inflation. And so by bringing in that energy rebate, it has stopped the flow-on effects of prices rising in food, in industry, and in other parts of the economy. Our energy market is not solved. Our energy issue is not solved, but the inflation in energy has been capped. And so that with housing has had a positive impact to the overall inflation number. One of the important things to also see in this campaign is that the Labor government have announced an extension of the energy rebate, which means it's probably going to stick around for some time because it's working. They figured out that putting a cap on energy or an energy rebate is a pretty cheap way of controlling inflation. You know, we are a $1.5–2 trillion economy. And if you're spending $3–4–5 billion and that's capping inflation, that is a very effective way of using a short-term tool. The coalition have come out and actually said that they're going to cut the fuel excise. And so again, that'll be a disinflationary positive factor flowing through to the market. So what does this mean for overall inflation? The price of things can continue to go up and down, and we may have a shock or a war tomorrow, and we don't know what the future holds. But what we do know is that inflation is now comfortably and sustainably. These are two key words that the RBA continues to use. Sustainably within this 2 to 3% band range. And this means that the Reserve Bank can now start to take its foot off the pedal and can now start to cut interest rates. We saw that a few weeks ago. As at the time of recording, there's an RBA meeting in a few hours. I don't think we'll see an immediate cut, but I do think we will continue to see more cuts this year. I do think there are at least 2 more interest rate cuts on the table this year in 2025 because the RBA can afford to do that. And the RBA is scared that if they don't take their foot off the pedal, they might be too late. Being too late has a very big economic consequence because if you slow the economy down too much, it's very hard to get it to pick up again. And so this balancing act is where the Reserve Bank is at the end of this first quarter. They're looking overseas, they're seeing what's happening in the United States, they're thinking about the potential fallout of tariffs, of a US stock market slowing, of a US economy slowing, of a China that hasn't really picked up and a Europe that's not really going anywhere. And the Reserve Bank will no doubt in the back of their mind be worried as to how that flows through to Australia, and they don't want to have the Australian economy shackled and held down unnecessarily. And so my view for the rest of 2025 is that interest rates are now in a declining cycle. Interest rates will be cut a couple of times, and that's going to be a very, very positive factor for the housing market. That is a factor that we have already seen starting to play out, which brings me to my second point of this update. Where is the Australian housing market given this macroeconomic picture? Given this slowdown in inflation and a reduction in interest rates, where is Aussie housing? Aussie housing has bounced, and Aussie housing had a moderation in 2024 in response to interest rates. But ever since that cut that we had a few weeks ago, the market started to pick up. Investors are no longer fearful of interest rates continuing to rise and are now optimistic, perhaps a little bit too soon. Nevertheless, they're optimistic that interest rates are on a decline. And so as an investor, you really have a limited range of areas where you can deploy your capital. Australia's economy is still very strong. Unemployment is still at record lows. People are working. The economy is healthy. And investors have a choice of putting their money in cash, where the rate of return is declining, going into a stock market that is very toppy and has run very hard over the past few years, or coming to real estate, an area where value is starting to emerge. I spoke to a real estate private equity investor a couple of weeks ago who specializes in the private equity space, commercial real estate. And in our discussions with Greg from Black Fox Property, he was starting to say that value is starting to emerge, that in their business, they're starting to see value in commercial real estate, and deals that weren't stacking up a few years ago starting to stack up. And it is that sentiment in the institutional space and also in the individual investor space where investors are starting to see value. Investors are starting to think if interest rates come down and if rents hold strong, this investment is starting to look more attractive than what it was late last year. And so we've already seen residential real estate prices in March, according to CoreLogic, increase. And that's optimistic. 1 month does not establish a trend, but it is a very important sign as to what we can expect in response to more interest rate cuts. Aussie housing has turned a corner. The pull down wasn't as deep or as severe as feared, and the Reserve Bank in hindsight seems to have done a very good job in balancing out the economy. So that's where we see Aussie housing from a macro perspective. And if we now drill down into individual markets and kind of look and see where the value is, we see a few things emerging. We see the eastern seaboard coming back. Perth was a very hot market last year. Adelaide was a very hot market last year. And those two markets were markets that benefited from value. As interest rates increased, there was a move towards affordability and value. But as interest rates start to come down, there will be a change in the market. And Sydney and Melbourne are the premier markets. Melbourne has continued to lag. Melbourne is finally starting to break out, but it needs more to kickstart. The Melbourne economy is very downbeat. Economic sentiment is very low. The state government has issues there with confidence. Property taxes haven't been very well thought out. There has been a punch in the face to investors over the past few years. And so while we're starting to see some green shoots emerge in Melbourne, it's probably too early to call that a trend. We need to see one more quarter of consistent growth before Melbourne starts to close the gap against Brisbane and then eventually against Sydney. Sydney is the premier market. Sydney has held its ground, and what we've seen over the past few months is areas of Western Sydney start to emerge and put on some very substantial capital growth. Areas in the southwest are performing quite well. Areas like Fairfield and St. Mary's and Campbelltown, and anywhere along that Penrith to Parramatta rail corridor, they're doing quite well. And the reason for that is that Sydney is a market that benefits from population growth and investments in infrastructure. Sydney's infrastructure pipeline is still ongoing. There is a metro currently being built and extended from Sydenham to Bankstown. There is a brand new metro being tunnelled that is going to go from Westmead through to Parramatta, Olympic Park, Burwood, Pyrmont, and end up here in downtown Sydney on Hunter Street. And so this pipeline of investment is going to continue to drive economic returns in residential investment. And a lot of that is in the West. The West is a beneficiary of that infrastructure pipeline. And so we think that the West will continue to grow, to post significant capital gains. Western Sydney is Australia's third largest economy. It's a $150 billion economy. That's bigger than many nations, many sovereign nations. And the Western Sydney economic powerhouse will only benefit when the new airport comes online, the new rail infrastructure, and then eventually with the changes in state government planning, the new amount of housing supply that comes on focused around transport-oriented development and infrastructure. And so I'm very optimistic for Sydney. I think Sydney remains the highest quality investment market. The areas with the greatest opportunity outside of Sydney lay in the regions around Sydney, the Hunter, the Central West, and the South Coast are still significant population centres. And then when we move away from Sydney, we look at Melbourne and we look at that market with hope and optimism, but we need to see a confirmation of those green shoots before we start to get more optimistic and we start to see significant capital growth come back in the market. I'll end with this in terms of housing. Brisbane has been a beneficiary of migration away from Victoria and New South Wales. There was a big shift towards Queensland for lifestyle, for economic opportunity ever since 2020, 2021. But I think what we're finally seeing in Brisbane is that price growth starts to get to levels where it's no longer attractive. It's very difficult to build in Brisbane because trades are competing against Olympic infrastructure. It's very different to find housing value. And so what we might start to see towards the end of the year as interest rates come down and Sydney and Melbourne get their groove back and Western Sydney starts to get firing again, that some of that migration that went into Queensland, some of it, not all of it, start to unwind and come back down south. Adelaide is an interesting market, but Adelaide is a market that moves the last one. It's usually the last to move. And it's moved really, really hard in the past 6 to 12 months, but I'd caution investors there that it is a market that can flatline and not move unless you have significant population growth and investments in infrastructure. And so that's how we're seeing Australian residential property finishing up the first quarter of this year. Over the next few weeks in the podcast, I have some great guests lined up. We'll be talking to Michael McCarthy, who is the CEO of Mumu, which is an online share trading platform, a global platform that has hundreds of thousands of investors. Michael's a great friend of mine. He was previously with CMC Markets. You've probably seen him on TV over the years, an industry veteran, and we'll be talking about opportunities in the stock market, where he sees the currency going, where he sees the Aussie dollar and other key markets, including crypto markets, going. And then we'll come back as the election ramps up and we'll be looking at policy and announcements, and I might have some political guests for you as a surprise. So make sure you subscribe to our platforms. Make sure that you write a comment, that you reach out to the team if there's any content that you find interesting. And I hope that this year is a year full of prosperity for you. I hope that you find comfort in the fact that inflation is contained. We have one of the world's most attractive economies in Australia, the best place to invest, and we'll bring you all the insights to help turn those plans into reality. Thank you.